What's up, team? Sean from Vesta Live here, and we're going to talk about doubling your money again, but this time with Uber. The other day, we did a video on what analysts are saying could be a 2x potential of Palantir, and lo and behold, here we are again with Uber. Uber, of course, is widely known as a ride-sharing company and has lots of other offerings. I want to touch on those today, and I want to touch on this news we just got. Myself, some other folks have done some videos on breaking down earnings on Uber, really looking at all of the potential areas they can focus on, all the expansive areas they can make more money, more revenue, do more things. But really, we haven't seen anything out of the analyst community. And this news came out of JP Morgan. So in a nutshell, they think there's huge potential here. But before we jump into that, I want to share something that's really worth looking at if you are looking at Uber as a company, looking at Uber as an investment, thinking about what you want to do with Uber. And full transparency, I haven't made a decision on what I want to do here. Typically for things like this, again, typically, and I'm serious here, don't take my word for it, you have to do your own research. I typically will play this in the form of call options or long options. Some folks might want to play some selling of puts, potentially to grab some premium with that protective sort of motion built in if we think we're going to see a huge price increase. In cases like this, though, where analysts are so bullish, that's where I will generally look for the most asymmetrical return. And if we're thinking about a long-term potential 2x of a stock, I want to leverage that with call options, but being smart about how I do it and understanding where and when it might make sense to do so versus just owning shares, depending on your portfolio, as well as your risk factors, right? So let me just share my screen for a second here. I want to make sure everyone's aware of really what we're talking about here at scale. So here we are on Uber's website. All I really did was scroll down to see all of their offerings. Now, most people, of course, know Uber for what, right? We know Uber as being a ride-sharing company, right? It's a way for me to jump in someone else's car with an app and get to my destination. It's super easy to use. I use it for work actually all the time. It's an app I have on my phone. But what's really interesting is if you haven't done this, you should do it. Like check out their website and look at all the other apps, products, and offerings they have here. And then again, I've called this out before. I'm going to call it again. They're in a lot of countries and a lot of cities. But just as a quick glance here, and I don't want to waste a lot of time on it, they've got lots of different ride options. They have Uber Eats. You can earn, of course, with Uber different ways, right? But what's some of the other things we're looking at, right? The standard ride sharing apps, we all know these, right? UberX, Share, and Comfort. We also have food delivery, right? We've got Uber Eats. We've got partnerships with restaurants. Excuse me. Some of the other things we're seeing is like Uber Freight, Uber for Business, right? There are so many other things they're working on and expanding. And when you think about what this really means, it means consolidating travel all into one app. I'm not going to go into details here. We've done other videos on this where we really broke down all of these components. But I wanted to just share this as a starting point to say there is a lot going on here, even if you don't always see it. So you may not see what's happening with freight. You may not see the way businesses are bringing them on as an enterprise product. And that's a big thing here is when we're talking about enterprise products, this means that a gigantic company with 80,000 employees might have Uber as their approved travel vendor. That means everyone who has to travel for work, they can literally log right in, get an Uber, it goes directly to their travel and expense reporting. This is a big deal if they're growing that part of their client base. Now, the point of this call, though, however, is to really talk about specifically what this news was. So at a glance, here's the deal. JP Morgan came out and basically said one of the biggest picks that they're looking at is Uber. Right now, of course, we already know what Uber is, and it's been around for a while, and it does a lot of revenue, does a lot of money in a lot of areas. However, what we know is they've been beaten down pretty bad. And as of the recording of this, they were down more than 45% year to date. So, they've been pretty beaten up. And I still use them on a regular basis. I just used them last week when I was away for a travel for work. So I want to call that out that look, they're still operating. I've had no problems getting one. I haven't seen any major significant changes there as well. And what I don't want to do though, is I don't necessarily want to talk about specifically their earnings, because again, I'm not looking short term here. I'm not looking 1 quarter out or 2 quarters out. Typically when these analysts, especially the better analysts, they're really looking at in a 12-month window where we expect to see here. So Doug Anmuth is an analyst for JP Morgan. And what he says is he sees a company that's strongly positioned to lead its niche and bring value to investors, and even copes well with the current inflationary environment. Now, if you think about this, it's particularly interesting because as home prices have soared, interest rates are going up, cars are getting more expensive and harder to find, there's more demand than ever for folks to think about where they consolidate their spending. Now, it may not always be convenient or easy to pay for an Uber, but versus an $800 or $900 car payment, for a lot of folks, it might be the better option because their bang for the buck is really going to the home front. Now, what's further is they also released this statement. We continue to believe Uber is emerging stronger from the pandemic as it focuses on product innovation, upfront fares, Uber X Share, hailables, and cross-platform advantages, Uber One, accelerated earnings, onboarding, right? But additionally, inflationary pressure is harder to gauge as consumers are sort of pulling this on themselves. So that's why this is sort of an idea of what they think is likely to happen. But until we get more details, it's going to really be hard to tell. And what's more, coming directly from this as well, I sort of mentioned this a minute ago, but I want to read exactly what they wrote. Elevated living costs could attract more drivers and create greater supply, which could actually help bring down the rideshare prices, meaning it might make more sense for me to call an Uber than to have an $800 a month car payment, plus insurance, plus gas, or whatever the case might be. Now, they know, of course, one thing they're calling out is that the delivery side of the business, right? Maybe the Uber Eats piece, that could potentially take a little bit of a beating, potentially, but that's still a small amount of the business, so it may not be a big deal. And they're calling this really a top pick. Now, what does a top pick mean in terms of JP Morgan? Well, they're basically saying that it is a top pick. It gets an overweight rating. Now, an overweight rating is really just another way of saying it's a buy in their analysis. And he also has a price target of $48 per share. At the writing of this analyst opinion, that represented 108% upside from where it is today. However, today, at the recording of this video, the price of Uber is around 22 a share. So it's even more. So it's actually quite a bit of upside here. And look, here's the deal, right? Uber still does a great job of getting information out. They do a great job of letting people know they're there. They're still working on their partnerships with major companies. Now, I don't know if this is the right fit for my portfolio. I'm still doing my research. I don't know if it's the right fit for your portfolio. That's up to you to do your research. But what I do know is they've been beaten down, but their business is still growing. People still need to earn extra income, and people still need to get to where they need to go in an economical way that may mean not owning a vehicle. So there's a lot of reasons to consider that this could be an option to 2x your money. And if you can find creative ways to do it via options or other derivative type products, it could be even better. So what I'd really appreciate, number one, let me know what you think. Are they way off? Is this a 2x? Is Lyft a better play? Are we missing the boat entirely? We shouldn't even be looking at Uber. So with that, everybody, I appreciate you watching. Thanks so much for the time. And let me know what you think. Have a good one.